Yes, thank you everyone. So this is 5th of September and we are up for yet another weekly community connect where we discuss about knowledge, wisdom and ideas. And hello everyone, I am Suyog Dhavan, founder of Strategic Alpha and the Conviction Club. We do this live stream every Friday at 9 p.m. to discuss knowledge, wisdom, and ideas. So let us go forward with the weekly roundup first. So this is 5th of September, and let us first look at the frontline indices. India VIX closed at 10.78, down 8.3% in past 1 week. Nifty 50 was up 1.3%. Nifty Midcap 100 was up 2.42%. Small Cap Index was up 2%. Public Sector Enterprise Index was up 2.2%. BSE IPO Index was up 2.2%. Now let us look at the sectorial indices. In past 1 week, the best performing sector was metal sector, which was up 5.8%. Nifty Auto was up 5.4% in past 1 week. Nifty Capital Market Index was up 4.4%. Nifty Transportation and Logistics, which is again auto, was up 4.4%. Now, let us look at the commodities performance. Metals, gold price. Gold has given a breakout this week. It was hovering around 3,400 USD in US, which has given a breakout, which was a key level 3,500 USD, which I've been talking about it in earlier sessions also. So the finally the gold breakout has again came, which means that gold will outperform going forward also. So gold is continuing its bull run. And we have been talking about it that precious metals, gold and silver, both are in bull run at least till 2028. So gold is continuing its bull run. So gold was up 3.79%, silver was up 2.93%, iron ore was up 2.277%, platinum was up, propane was up, natural gas was up, new uranium was up 2.2%. Now let us look at other industrial commodities. Zinc was up 1.3% and the other commodities as mentioned below. Now the biggest development which happened about this week is GST. So GST rate rationalization has happened. GST 5%, 18% slabs, most of the items have placed into that, and 40% is one more slab, which is luxury and sin goods. This development has been brought to negate from the Trump tariff impact. So we have seen that big development happening in past 1 week. In fact, there were earlier signs only when few weeks back I had said that some developments related to GST rate rationalization might happen, and that announcement had already came. Now the detailing of that announcement has came this week, and it will be implemented by September 22nd. And though it is bullish for markets in long term, markets have not reacted positively in the short term. In fact, I posted about it that the macros for India are getting better and better and better. One of the best macros which you can have. But the problem is not with the country's fundamentals. The problem is with country's valuations, equity valuations. And because when the equity valuations is good, uh, you might not see a big drop in Indian markets, but for this all developments, even before the developments, what has happened from the income tax perspective, which Nirmala Sitharaman has announced up to 12 lakh, there is no income tax. That development also is there. Along with that, the rate rationalization from GST perspective, this is one more development. Third development is the rating upgrade. So two, three positive developments have happened, but the market is not reacting positively because it will take some time for the entire developments to trickle down to the economy. And I said that in the conviction club that it will take 2 to 3 quarters for the positive impact to trickle down to the economy. As of now, markets are overvalued, and when equity cycle is against you, no matter how great positive development happens, market doesn't take react positively because already markets had moved up, the valuations were expensive, and that's the reason why even though a lot of big positive developments have happened from country's perspective, still we are one of the worst performer markets in emerging markets as well as global markets. That is because prior to that, earlier we did very well. Now, that is what will be there. And overall, the equity cycle, equity as an asset class itself is unfavorable. I have been talking about it since last year around April to May. That is when I started talking about it. And in September itself, I talked that this is the last phase of bull run and you cut down the equities and increase the precious metals. In fact, precious metals has done much better than equities in past 1 year. So gold is up 60% since our gold bull run session, which we took in March 2024. And silver is also up 65%. Even from the September levels, both are up 45%. So that asset class as a whole has done much better than equities. And for some time, it will continue to do well. At the time when equity valuations in India will once again might get comfortable at that, until then the gold and silver will continue to outperform. That is what the overall situation is. Now let us look at second news development, which is RBI started diversifying US treasury holding and purchasing gold, says Nirmala Sitharaman. So which means that gold is set to outperform, and it is not only India. Most of the global banks, means global federal reserves or global central banks, they are purchasing gold. So diversifying treasury holding and purchasing gold is one more big positive for gold and precious metals, which is already in a precious metal bull run at least till 2028. I have been repeating about it. Now let us look at Strategic Alpha's FTVT framework. What are the sectors which are in uptrend, high relative strength and low valuations? So I have started liking this copper miners, and I've talked about it earlier also. And copper miners in US is looking good to me, at the same similar to what silver miners looked to me earlier. So I'm studying that, and it has qualified from our FTVT framework. Now let us look at the stocks which I am studying. Stocks which I am studying is Tega Industries, Nalco, and Jindal Steel. In fact, I am owning Tega Industries, Nalco, and Jindal Steel, bought on Monday, Tuesday this week, and which I might increase further. Last time when I discussed, I said that Olectra Green Tech I have bought it, but it didn't show any follow-up move. So I had reduced my position by 75% in Olectra Green Tech, and I shifted that to Tega Industries, Nalco, and Jindal Steel. I bought Tega Industries at around 2025. That is my average. Nalco, my average is around 195. Jindal Steel, my average is around 1028. So I'm already holding those, and I might continue to increase this position. And these are all about satellite stocks, nothing to do with core, because satellite is all about positional trades. And this is where I'm focusing on, this is where I'm owning. So these are the stocks which are showing high relative strength compared to markets. Now let us look at what has happened with equity markets. See, last week, because I was in Goa's Investor Accelerator Summit, I wasn't able to take the weekly roundup. The last week, I had said that there is a gap here, and markets might fill that gap. And exactly it happened that way, that before the GST announcement came, what happened was market filled that gap, and there was some weakness. In fact, I said that if you are planning for any trade kind of a thing in future, this dip should be used to focus on the stocks. And this weakness told you, and it was very clear in that weakness, metal stocks were the stocks which didn't fall much. So that is the time uh, you should have focused on metals. In fact, we also discussed the metal stock. In those weakness itself, I started posting about that relative strength in metals. I posted about Nalco last Monday, around 190 rupees in satellite channel. I posted about Jindal Steel. I also posted about SAIL at around 125. So all these stocks were showing high relative strength. When the markets have gone up, metal stocks have done extremely well compared to markets. Now let us look at this. So as I said, that gold bull run continues. So 3,500 was very key important level for gold. And if you can see here, the gold has given a symmetric triangle breakout. So this is what technical projections are saying. So first of all, let me just tell you whatever we are discussing here in this weekly community connect, nothing should be taken as a recommendation. I'm just sharing my understanding what is there and how the overall charts, how the overall fundamentals, technicals, valuations are placed. So gold bull run is continuing, and it has given a fresh breakout, which means in the commodity bull run session, I have explained about why gold and silver are in bull run at least till 2028. Many people will be amazed when I talked about gold when it was trading at 56,000 to 62,000. Many people, when I said that gold can touch 1 lakh, many people were not believing it. Now gold has already crossed 1 lakh. It is trading at 1 lakh 7,000. And if I say now that gold can touch 2 lakh rupees from here, many people will not believe again. But that is what the overall trajectory is looking at, because when the precious metal bull run starts, bull run happens, uh, it happens like anything. So if you have not gone through my commodity bull run session, I had posted that on VIP access. Just go through the VIP commodity bull run session, you will be able to understand. And I'm bullish on gold at least till 2028. Even on silver, gold and silver, usually silver outperforms the gold. There was a session which I have done on silver also 5 months back. Silver was trading below 1 lakh rupees then. And since then, it has been a big bull run. In fact, small caps have struggled, and silver has done much better than small caps. Now, silver, I had said that whenever it drops to this channel level, that can be a good level to add. And in fact, it dropped to that channel level, and now it has given a channel breakout above this zone. And fundamentally, silver usually trades at 2% of the gold price. Gold is now trading at 3,600, which means fundamentally, on a ratio scale of 2%, silver should at least trade at 72. And this is not my research, it is research published by DSP Netra. You can go through that, which means silver is still heavily undervalued. Silver, the fundamental value as per the comparison is around $72, and silver is still trading at $40, and it has also given a channel breakout. So, which means silver bull run is continuing. Gold and silver both are in bull run, and it has both have given the fresh breakout out of the narrow range. Now, I had also talked about silver miners in March. Silver miners were trading at around 25 to 30 levels, $30. Now, silver miner has crossed already 60.92, which means silver miners has doubled your money in less than 18 months. Silver miners more than doubled actually. It was trading at 25 USD when I talked about it. The session is available on YouTube. You can go through that. And now it has given a breakout from a 9-year range. From a 9-year range. And whenever any commodity, any stock breaks out about very long range, it's a super bullish sign. So silver miners can continue to do well. At this point of time, I don't know whether where you should buy or not, that is your own decision what you want to do. But this is certainly where I'll be looking to average more. Usually I look to average more on the upside. So I bought it here, then I had bought it here, then I'll be I had added here in fact, and it is continuously doing well. So as of now it is looking like the silver miner journey, 30-40% as journey has completed, maybe 50% journey has completed, more 50% journey is pending still in silver miners. So I'm not in a hurry to book my profits in silver miners, because usually when the commodity and commodity miners move, these are kind of a once in a decade kind of an opportunity. So silver miners are continuously doing well, and this is a pyramiding level in fact. Now let us look at one more commodity. I have discussed about it in commodity bull run session. First, commodity bull runs are started by gold. Then silver enters into the commodity bull run, which has already happened. Now later the commodity bull run also enters into copper. And copper is at a asymmetry. And I think copper can start its bull run now, from now. uh, but gold is the most safest. Silver becomes second safest. Copper becomes a tricky thing compared to silver, because as you go down in the commodities, risk increases. So you should assess that risk and manage that risk well, because gold is the safest commodity. Then comes silver. But the third commodity, which in less safer than gold, silver, is copper. The reason for that is gold is bought by global central banks. Silver is also some of the global central banks. Silver also is bought as a reserve currency or reserve asset. But copper is pure industrial use, and most people, it is like a poor man's asset. Gold and silver is like God's own asset, but copper is like poor man's asset. So in a commodity bull run, all the commodities rise. We are in a commodity super cycle already, but gold and silver are God's own assets. Now, but copper can also do well. So this is what I'm looking at. In fact, I'm actively looking at copper miners in US. Now I'm started focusing on copper miners. In fact, last week itself, on Monday itself, at the start of the week, I said about it that the sector rotation is happening again, once again, towards metals. Sector wise, Nifty 500 stocks close to 52-week highs. 60% of the metal stocks are near 52-week highs now. This is from the Nifty 500 stocks, which means the sector rotation, which earlier favored, first, when we discussed in February, March, I discussed about in finance, and finance stocks are already doing well. Now, after that, few of the finance stocks showed weakness, and the leaders were leading. Like if you see Manappuram Finance, it is at lifetime high. I discussed about L&T Finance, it is at lifetime high. HDFC MC, it is at lifetime high. So some of the during the sector rotation when it favored finance, those were the sweet spots. Now the sweet spot later entered into auto, and that point of time I had discussed about Hero MotoCorp. So during that time, the sector with that sector rotation, Hero MotoCorp was the case which I discussed in the Conviction Club, and that has been continuously doing well, and it has been going up. Now auto has taken a step back, because in this, when the autos, because sectors keep on rotating, but winner from that sectors keep on riding that trend, but other weak stocks which are non-deserving stock, because of that the percentage of stocks near 52-week high collapses. A few weeks back, the number of stocks above 52-week high, near 52-week high for auto was close to 50%. So what happens is the leaders take the charge, the laggards remain behind, and the new sectors emerge. And even now today, metal is very stronger. It is even stronger than auto, because in auto we saw 50 to 55% of the stocks closer to 52-week high. But in case of metals now, what has happened is close to 60% of the stocks are near 52-week high. The sector rotation is happening, but not all sectors, not all stocks will do well. The leader from the pack, which we identified and I discussed about it in satellite channel, was Nalco. We discussed about it around 190, and that is the leader from the entire metal pack. Now, don't look at the stocks which are nearing 52-week lows, because usually those stock doesn't do well. So focus on the stocks which is, how do you find sector leadership? You need to find a sector leadership only looking at the stocks which are trading near 52-week highs. If you are looking it from a sector rotation is a satellite strategy. It is not a core portfolio strategy. If you have bottoms up idea within that, like as I had Nalco or for that matter sale, uh, so such stocks can luckily, if whenever the sector rotates and if it is making 52-week high, that becomes a natural high conviction idea for you. So in case of metal, when the sector rotation started last week, Nalco was my top bet, and in fact, it has done very well from 190 to 212 in just 1 week. I discussed that on Monday itself, and it is up from 190 to 212. So metals is the sector which is rotating now, which the money is flowing to metal sector. And why is that? Is because dollar is losing its dominance. Dollar index is weak again. So one more stock which I discussed in satellite channel is Tega Industries. So Tega Industries, it is above 61% retracement, and Tega Industries, I'm also owning it at 2025 rupees. It has closed well. In fact, it has given a weekly breakout, and it can do well. The best positive thing about Tega Industries is the free float is just 5%. If you see the public shareholding, the free float is just 5% in Tega Industries, and most of the 18% holding is from institutions. There is some FII holding, and 75% is with the promoter. So if any up move comes, it can be very rapid up move in Tega Industries, so which I am already owning, which we discussed this case in satellite channel. Now let us look at next, which is Nalco. So Nalco, I discussed about it when it was just touching this at around 30-week moving average, which is Stain Winston's 30-week up stage 2 uptrend, which we discussed. Similar case to Hero Motocop, and Nalco has given a big breakout, and it is leader from the entire pack. One more case which I discussed was Jindal Steel in satellite channel. If you have not gone through it, just go through it on satellite channel, my discussion on Jindal Steel. Now, Jindal Steel has also given a clean breakout. It has just moved up from this 30-week moving average line, and then it has just entered the stage 2 uptrend. So, Jindal Steel is one of the satellite stock which I discussed. Now, one more thing which one should look at is copper miners ETF. So the instrument is COPX, and I think it is at a asymmetry. It has just broken out on a monthly chart. If you see, this is monthly chart. On a monthly chart, it has broken out of the long consolidation, and it is at the same place where silver miners were there. But one should be doing very detailed research before taking any decision, because if you are taking any decision on the basis of this weekly discussion, if you do any profit or loss, it is your own thing. Please don't blame me for any profits or losses if you have made. I'm just discussing what I've been doing for myself, and what I'm sharing with the community members. So this is just purely from an educational perspective. Please duly research before taking any investment decision. In fact, hire a SEBI registered investment advisor. I am not a SEBI registered investment advisor. I'm just sharing my learnings with you all. Now, this was all about this weekly in a weekly roundup. Now, if you have not followed me on social media handles, do follow me on Twitter, Instagram, YouTube, and Facebook. I'll post that these all handles on VIP access. If you have not followed me on Twitter, because I do all the weekly discussions at the end of the week, but live, I'll be posting all that on Twitter. So if you have not followed me on Twitter, just follow there. And usually, whatever the approach which we follow in Conviction Club here, which I teach and which I preach, which I myself follow and all the community members follow, is FTVT approach. And what is FTVT? FTVT is fundamentals plus technicals plus value plus triggers. Because fundamentals tells you what to buy, what not to buy. Technicals will tell you when to buy, when to increase, when to reduce, when to exit. Value will tell you how much to buy, and triggers will help you prioritize the bets. Because even after filtration, you might get 25, 30 opportunities. What are those 3, 4 opportunities you need to focus more on? That will be told by triggers. And this is what we learn in the Techno Value Investing workshop. So I'll be doing the Techno Value Investing workshop next month. Whenever I'll be posting about it, just register for this workshop. I'll be discussing this FTVT framework with you all. And this is all about learning smartly and wisely in stock, investing smartly and wisely in stock markets. So I'll be doing that registration. I'll be taking that workshop soon. This is not the date of the workshop. I'll be doing the workshop in October. So do register for that workshop whenever I'll be taking that.